The US Fed holds rates steady and rules out rate hikes as the central bank's next move despite few signs of progress on inflation easing. Stocks closed mixed on Wall Street. Asian markets trade mixed, while the gift Nifty is also suggesting a mildly higher start for the Indian market. Crude prices correct as US stockpiles surge. WTI crude hits a 7-week low, while Brent trades at around $83 a barrel. In one of the largest and most complex family separations in corporate India, the Godrej family has reached a settlement after 5 years of hectic negotiations. Adi and Nadir Godrej will retain control over Godrej Industries and its listed entities, while Jamshed and Smita Godrej take ownership of the unlisted Godrej and Boys and affiliates, along with a land bank in Mumbai. Sources indicate the enterprise value of the family ownership in the group is worth $20 billion. Automakers report a mixed bag of sales for the month of April. Sales disappoint for Maruti Suzuki and Eicher Motors, while TVS Motor registers 25% sales growth, beating street estimates. Tata Motors passenger vehicle sales come under pressure, while commercial vehicle sales have remained strong. KVS Manian resigns as director and key managerial personnel from Kotak Mahindra Bank after a 29-year stint. In other key earnings to track, watch for earnings from Adani Enterprises, Adani Ports and Coal India and Federal Bank as well. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. It was a holiday yesterday, so there are a lot of cues that we are talking about, be domestic and global as well. But first up, let's talk about the global cues and take a look at the Asian markets. It's a mixed picture right now. We got a mixed handover from the Wall Street as well. Fed kept the rates steady, and we have the Hang Seng, which is doing really well right now, 0.7% higher there. However, the Taiwanese index has come in for some decline, so that index is down around 0.4%. The yen has strengthened a little bit after the sharp fall that we saw, but Nikkei continues to be in the red, 0.2% lower there. So largely a mixed picture. But if we look at the gift Nifty, because that is the one that will indicate the moves in our own markets, that's indicating a slightly higher move for our own markets. 29 points higher is what the implied open is suggesting right now. Let's talk about the US markets then. Wall Street ended mixed on Wednesday. Dow Jones advanced over 80 points after the Federal Reserve Chairman Jerome Powell ruled out the possibility of a rate hike. The S&P lost 0.3%, while the tech-heavy Nasdaq slid 0.3%. The Federal Reserve has decided to keep interest rates unchanged for the 6th straight meeting. CNBC Steve Leesman gets us the key highlights from the FOMC meet.
The Federal Reserve leaving rates on hold in the range of 5.25% to 5.5%. It does note a lack of further progress on inflation in recent months. The prior statement had noted that there had been progress. It says the risks to achieving the dual mandate have moved towards better balance in the past year. Note that they had said before we're moving, so that's another kind of reference to stalled progress on inflation. It repeats that it does not expect a cut until it is confident inflation is moving towards that 2% target. It reduced the quantitative tightening runoff to $25 billion from $60 billion. Pretty aggressive reduction there, and that begins in June. A way to think about this is, if my numbers are right, it's a runoff that had been going at $720 billion a year of treasuries, by the way, down to $300. It left the runoff of mortgage-backed securities the same at $35 billion. Again, that QT goes from 60 to 25 on treasuries and begins in June. That is a cap on the reduction. On the economy, the Federal Reserve says continues to say the economy is increasing at a solid pace. It says job gains have remained strong, repeats that inflation has eased, but again noted that progress has stalled. And I'm going to repeat some statements that they repeated this time around, but maybe now they're perhaps more important. They said the committee strongly is committed to bringing inflation to 2%. They're highly attentive to the inflation risk, and they're prepared to adjust policy as appropriate.
Well, the Federal Reserve Chairman Jerome Powell says that the inflation has eased over past year but still remains too high. He added that the committee needs to be confident that the inflation is moving towards the 2% target before going for a rate cut. Let's listen in.
The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace.
Okay, it's also time to listen into some important opinion coming in from market experts reacting to the Fed's decision to keep the policy rates unchanged.
We could see inflation stay above 2. We could see inflation be a little bit sticky. And if the unemployment situation really deteriorates, they could start cutting. And Jay told you that today. To me, that's much more consistent with this view that we've put out for most of the year that the Fed puts in place. If things get messy, they're here to help you. And they haven't been here to help you in 2022 and 2023. That was a real problem for the market, certainly in 2022, when we had the 25% downdraft or even a little bit more. So to me, the Fed really is much more balanced. If things get messy, they're here. I think he's very comfortable with inflation back down to 2.7, 2.8. If it grinds into 2, he's going to be okay with it. But if you really see something going wrong, we're going to get rate cuts. We're going to get something that helps us out.
Away from it. I mean, we've got unemployment below 4. We've got consumption deflator inflation below 3. 3 plus 4 is 7, but 3 plus 4 is also good. These are good numbers for the U.S. economy. Growth is slowing, but it's slowing at a modest pace. So really the economy is fine here. There's nothing wrong with the economy. It's just all a little too hot for financial markets who are banking on big rate cuts from the Federal Reserve this year. But even the statement, I think the one thing that strikes me is they could have cut the Treasury runoff from 60 to 30. The fact that they went that extra $5 billion, it probably doesn't sound like a lot, but it does say that they're trying to send a message here that they're not going to be too hawkish here. So if anything, I would regard this statement as being slightly on the dovish side, and it gives me more confidence that they won't hike again, but they will eventually cut rates this year.
It almost feels to me like he's hoping that the inflation data comes down without a rate hike. And I guess he feels that the lack of progress, as he framed it, during the first quarter is going to be transitory. So we'll see. With oil prices at $80 a barrel, I'm not really sure we're going to see the inflation numbers come down in a sustainable way below 3%, particularly not on the core numbers. So the markets, as you correctly pointed out, love this because there was fear of a lurch toward some suggestion of maybe contemplating a rate hike, and that absolutely did not happen.
Okay, let's move on now. Wednesday was a heavy day of earnings on Wall Street. Shares of Starbucks slumped in trade, falling 15% after the company reported weaker than expected quarterly earnings. The coffee chain reported shrinking same-store sales growth and falling traffic across all its operating regions. The company also slashed its forecast for the current fiscal and said it expects its cafes to keep underperforming for several quarters. Also, stocks tied to artificial intelligence were under pressure after disappointing revenue forecast. AMD tumbled over 8%, while super microcomputers fell 14%. Okay, with that, let's move on because that's the global market action. Let's talk about how it will impact our own markets. Our research team is joining in with just that, the trade setup, the stocks that will be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Sudarshan, let me come across to you first up. What is the market setup looking like today?
Morning, Sona. So it's going to be an interesting day of trade as we have the cues of last 2 days to react to. So for US market, if we combine the move of last 2 sessions, major indices have fallen up to 3%. Following Tuesday's sharp fall on Wednesday too, we saw close in the red amid major swings and Fed's decision to keep the rates unchanged. But more than equities, what would be interesting for us today is move in crude in the last 2 days. In the last 2 sessions, crude has fallen up to 5% and Brent is now back below $84, which is the lowest level in last 2 months. So overall, cues are mixed for today. But if we talk about the last session, that is Tuesday, it was looking like a good day of trade for majority part of the day with major indices hitting record highs. But in the last hour, we saw a sharp fall with all the indices at the close was at day's low and falling 1 to 2% from day's high. And for Nifty, culprits were mainly from financials and IT, mainly likes of HDFC Bank, ICICI Bank and TCS. But the fall did not really reflect in the flows, that is in the cash market. Both FIs and DIs were buyers in the cash market for second straight session. And for today, GIFT Nifty is indicating a start with minor gains. On to stocks to watch, keep an eye on few stocks that will be reporting earnings today. From Adani Group, it's two major stocks, Adani Enterprises and Adani Ports are there. Also keep an eye on Federal Bank. Besides earnings, we are expecting other announcements as well.
Okay, all right. Yes, so there's a press conference which is scheduled at 2 p.m. and we have a management conversation lined up as well. Thank you so much for that, Sudarshan. Over to Vamakshi now. She will list out all the stocks that will be on our radar today. Good morning, Vamakshi.
Well, good morning, Sonal. Let me first start off with Ambuja Cements. The company reported weaker than expected numbers. The revenue saw an uptick of almost 12%, but the margins have contracted on a year-on-year basis to 16.7%. Net profit is also higher by almost 6%. Havells, on the other hand, reported a better set of numbers. The numbers were higher than what we were expecting. Revenue saw an uptick of almost 12.1%. Margins have come in higher at 11.7%, and the net profit resultantly has risen by 24%. Indus Towers margin has expanded from 51% to 57%, and the net profit as a result has come in nearly 32.5% higher. In fact, the company said that it is in discussion with Vodafone Idea for a revised payment plan with respect to the outstanding dues. Some auto numbers also came in. Maruti Suzuki reported a third consecutive fall in sales on a month-on-month basis, and in fact, wholesale numbers have come in below estimates at 1.68 lakh units. Tata Motors reported a mixed bag as far as auto sales are concerned. PV sales were under pressure. CV sales, however, were strong. PV sales were up only 2%, while electric vehicle sales were under pressure, down nearly 2%. Wipro, on the other hand, has won multi-million-dollar deals to transform Nokia's digital workplace services, and RVNL has emerged as a lowest bidder for Eastern Railway project with almost 391 crores. Watch out for Mishra Dhatu Nigam as well, because the company has secured orders worth 139 crores. And lastly, we will be watching out for Jindal Stainless. They've announced a 5,400 crore strategic investments which will increase the company's melting capacity by 4.2 MTPA.
Okay, all right. Thank you so much for that list, Vamakshi. Let's talk about the cues from the F&O space. Manglam is joining us now. Manglam.
Good morning. So, if you saw the way the markets closed on Tuesday, you would see a bit of a decline, but you would miss the big rally that we saw in the first half of trade itself. The Nifty Bank as well as the Nifty Financial Services saw their weekly options expiry play out, and as a result of which, we saw those indices decline from the day's high because of the call writing that was witnessed out there. The GIFT Nifty now indicates a mild positive start, and we have three important cues to watch in today's trading session. The first one, the Fed ruling out a hike overnight and the resultant impact on the US markets. Secondly, crude falling to $84 per barrel is a positive for the Indian markets. And thirdly, we have the Nifty weekly options expiry playing out today. In that, the cash market flows were positive for the second day running. The FIs and the DIs together bought about 2,500 crores, so that's a positive. But the headline of this morning definitely is the FII action in index futures, where they've turned net positive, net long after a very long time. So we have 4,000 crore worth purchase in index futures by the FIIs, 47,000 long contracts being added, 15,000 short contracts being covered. And as a result of it, in 3 days itself, FII long exposure has jumped from 35% all the way up to 52%, and the shorts have contracted from 99,000 net shorts to about 16,000 net longs itself. That's the big swing. 22,700 put has been extremely active on the Nifty, telling you that levels at which we closed on Tuesday are an important support, 22,600 that is. And were we to go higher, there is still some congestion around 22,750 to 22,800. And if we go past that at some point, then maybe some punt buying is visible at 22,900 as well. Apart from the auto stocks, we'll have a lot of stocks in focus from the F&O space, and PFC, REC really stand out with a lot of long positions being added on Tuesday's trading session. And a lot of short covering is what we saw on Jubilant Food. Important to see whether that sustains or not.
Okay, all right. Thank you so much, guys, for joining us today. So that is the market setup. Time for a short break now. When we return, in one of the largest and most complex family separations in corporate India, the Godrej family has reached a settlement after 5 years of hectic negotiations. We'll get you all the details on the other side. Stay tuned. Welcome back. You're still tuned into Power Breakfast. It's time to get you some important news updates. Kotak Mahindra Bank's whole-time director and joint managing director, KVS Manian, has stepped down after nearly 30 years with the bank. Abhishek joins in with more details.
Well, as you mentioned, Kotak Mahindra Bank has given a press release wherein they say that Mr. KVS Manian has submitted his resignation and it's been accepted with immediate effect. So KVS Manian ceases to be a director of the bank and key managerial personnel as well of Kotak Mahindra Bank. In his letter, he has mentioned that he intends to move on, going ahead, and he also wrote that it's time for the next chapter in his life and he is moving ahead with belief and optimism that he can yet again find a fulfilling assignment or fulfilling role for his career. So on 15th Feb, 2014, CNBC TV 18 had reported that Federal Bank has shortlisted Mr. KVS Manian as the CEO candidate. So Federal Bank also has two internal candidates for this post of MD and CEO. We had at that time written to Federal Bank. They had replied to us that the process is overseen by the board in accordance with their succession plan. Incidentally, today they have a board meeting to consider their Q4 FY24 as well as FY24 results. And, in a release to media, they have mentioned that they'll also discuss future plans and key initiatives in the board meet. So perhaps this can be on radar as well. Back to you.
Okay, all right. Federal Bank definitely on our radar today. Thank you so much for that. In a large corporate development now, Godrej family separates the group amicably into two factions. Nisha Pudar is joining us with all the details on this one. Hi, Nisha.
Yes, good morning. It's a big corporate development that has taken place in 127-year-old business group, Godrej Group. And now there are two factions out of amicable settlement that has been created by the family members. The two factions would be Godrej Enterprises Group or GEG by Jamshed Godrej and Godrej Industries Group under Adi and Nadir Godrej. Now looking at the two factions, remember that GEG, of which Jamshed Godrej will be the chairperson, and also Nirika Holkar, family member and niece of Jamshed Godrej, would be the vice executive director over there. And on the other hand, GIG will have Nadir Godrej as the chairperson. Remember, Adi Godrej has had stepped down earlier from the group and will be taken over by Feroz Shah in August of 2026. So this is the construct of what the two factions will hold. Also remember, in terms of companies, Godrej and Boyce, that large company with the Vikhroli land holding, will come under Jamshed Godrej, while Adi and Nadir Godrej faction will have most of the listed companies of the group like Godrej Consumer Products, Industries, Properties, Agrovet and even Aztec Life Sciences. Now few details about the brand. Godrej brand will be used by both the factions is the understanding, and in terms of Godrej Properties MOU for the Vikhroli land development, so the ownership lies with Godrej and Boyce, but the MOU will continue as has been stated in their release. Now, a few aspects that we sourced exclusively from sources, which is not mentioned in any of the announcements, is first that $20 billion is the enterprise value of the family ownership in the group, and that's the valuation that they derived at for this separation. Second, Godrej Properties retains the Vikhroli land development right or ROFR on that as per the MOU, but there have been some changes or upgrades in terms of the obligations that Godrej Properties will have at the time of development, and that needs to be seen in the fine print. While GEG, on the other hand, can own this particular Godrej brand since it's a family surname, both the factions will use it, but there will have to be a logo differentiation, which I gather from sources. Jamshed Godrej faction is likely to transition into a new logo in 1 year's time. Also, cross-holdings between the two factions will be cleared off, especially in the listed companies, via share sale transfer on the exchanges. It will be inter-se transfer of shares amongst the family members. In a new development, the listed company Aztec Life Sciences, that is already seeing the effects of this share agreement as well as the separation in family, because a 26% offer has been launched by Adi and Nadit Godrej in Aztec Life Sciences, which, remember, is indirectly held by Godrej Industries. And the key players in this particular separation, which was harmonious, were some of the four advisors like Uday Kotak, Cyril Shroff, Zia Modi and Nimesh Kampani.
Okay, all right. Thank you so much, Nisha, for joining us with those details. With that, we'll slip into a break. When we come back, we'll talk about all the cues from the commodities market. So stay tuned for that. Welcome back. Let's talk about the latest updates from West Asia. The U.S. Secretary of State Antony Blinken met with Israel's Prime Minister Benjamin Netanyahu to discuss ceasefire talks. The two also discussed the matter of pushing more aid into Gaza while urging Hamas to accept a deal that would halt fighting and release the Israeli hostages. This is Blinken's 7th visit to the region since the first attack on 7th October. Blinken also met with other senior Israeli officials later. Okay, all right. With that, we'll move on and talk about all the updates from the commodity space. Manisha Gupta is joining us now. Hi, Manisha. Good morning.
Morning, and thank you for that, Sanal. I'll start with the crude oil prices, where we have seen prices decline 3% overnight, and we are down by 8% on month right now. So we're trading very close to the 2-month lows, and this is on the back of increase in U.S. inventories, increase in U.S. production in sense of crude, and also the easing geopolitical tensions. And we have seen the crude oil prices come off quite sharply from a high of almost 92 in the month of April to around $83 a barrel for the Brent crude prices right now. Profit taking is also what we've seen happen in case of gold prices, but it seems to be looking at some support at $2,300 an ounce. Overnight, after the U.S. Fed announcement, we did see prices go down to 2280 as well, but we've seen a smart rebound of almost $30 from those kind of levels. The U.S. inflation has moderated but remains elevated, is the statement coming in from Powell. The markets also have seen the World Gold Council data, which suggests that even with the gold prices at around all-time highs, the global gold demand actually rose by 3% in the previous quarter. So there is a resilient demand that we've seen in gold even at these higher prices.
Okay, all right. So that's what's happening in the commodity market, especially that sharp fall that we're seeing in crude prices. Thank you so much, Manisha, for joining us as always. And that's all we have on Power Breakfast today. But do stay tuned. Bazaar Morning Call comes up next.